Gold and silver. What do experts think about the long-term prospects for precious metals? Economic uncertainty means you have to keep up with what's happening. Make sure you subscribe and we'll keep you in the know. In a recent article discussing gold and monetary policy, Bloomberg analyst John Stepek made the following observation. The flip side of falling interest rates being good for the gold price is that rising interest rates should have been bad for gold, and they haven't been. In 2022, the Federal Reserve raised interest rates by 425 basis points. Both J.P. Morgan and Credit Suisse projected gold would drop nearly 20%. Instead, by the end of the year, many of the most popular mainstream assets were in the red, while gold and silver both finished in positive territory. In fact, through 2022 and 2023, a period when the Federal Reserve raised interest rates a stunning 11 times and by a total of 525 basis points, gold outperformed several of the most recognizable asset classes and market indexes. So why has gold managed to persevere through a rate climate that analysts say should have hampered it significantly? Last year, John Hathaway of Sprott Asset Management dismissed as nonsense the idea that U.S. dollar strength and rising interest rates would hamper gold at the same time there were so many diverse risks to global stability. One reason is central banks eager to hedge their reserves have energized gold demand over the last 2 years. The World Gold Council reports that central banks purchased 1,037 metric tons of gold last year, just 4% less than the record of 1,082 metric tons purchased in 2022. A number of central banks are turning to gold to help them de-dollarize, to diversify away from the dollar and hedge against the risk of U.S. economic sanctions and America's growing fiscal instability. Analysts say the relentless demand for gold by central banks has gone a long way in supporting prices during a phase that should have been more hostile to metals. BMO's Colin Hamilton recently went as far as to suggest that gold is now in a, quote, new era, one in which its historical correlation with real rates is broken and its prices driven primarily by heightened demand. In a world plagued by uncertainty, gold has consistently endured, defying historical conditions that otherwise might have caused the value to plummet. When we look ahead, global uncertainty persists alongside economic conditions that have traditionally bolstered the strength of gold. That is why the outlook for gold remains highly favorable and why our viewers at home should consider its potential. That's why I suggest you take the time to learn more about what's really going on in the economy by attending our exclusive one-on-one web conference at AugustaPreciousMetals.com/webconference.